Friday markets were ended in green, and Monday today we are in red. So, are you a kind of trader who decides bullish or bearish based on one day's green or red candle? That means you are doing a terrible mistake of deciding your views just on one green and red candle. If you have to look at the entire structure in the markets. Now, what you're going to do in the next 5-10 minutes is look at the entire structure of Nifty and Bank Nifty and decide what is that we're going to be looking at in the next couple of days. Let me look at quickly on the Bank Nifty. Bank Nifty is absolutely not looking great because I am seeing low rise structure in the price action. The first high was 44,000, close to 44,500. Second one was about 44,400 change. Third one, 3 to 4 days of struggle to not to cross 44,200. And now last 3 days high has been around 44,050 or 60 levels. So basically each rally is stopping short, right? Now if the market keeps doing this, that means this is telling me that the buyers who are trying to buy around the support area, they are doing a very terrible job of taking the market higher. So no higher highs have been formed. That means they are not able to defend the resistance that is created by the seller. So supply is there, and the supply is getting lower and lower. That means supply zone is getting lower and lower, which is not a healthy sign for the up move. Having said this, if I look at the momentum per se, momentum is certainly showing divergences. RSI is unable to get back above the short-term moving average only. So look at RSI is unable to get back above short-term moving average. Price unable to get back above short-term moving average. If I go to lower structure like hourly chart, again clearly today's action. See, price came below this long-term moving average red line. There was a sharp sell-off. Next rally, we again unable to close above this orange or the red line, which is a long-term moving average. Even on an hourly chart like this, we are seeing struggle to cross a long-term moving average resistances. That means the structure is getting slowly poised towards the downside, not on the upside. So I'll be very, very cautious on the buy. And if any rally that happens on Bank Nifty, right, I will not use that Bank Nifty to buy. I will rather start liquidating my long positions if I have, or probably very cautiously start building a short position given the structure. So don't decide your buy or sell based on one green or red candle. You wait for the entire structure unfold, because structure takes a couple of days. One green, one red candle is definitely part and parcel of the entire structure that we're looking at, right? So now what is that I'm expecting? So any rally towards 43,800 will definitely be looked at very cautiously. I don't think 43,800 to 44,000 would definitely be breached in the next 1 or 2 days. So there is a lot of supply that is coming around 44,000 levels, plus or minus 100 points here and there. So there is a lot of supply that is coming. So what is that I'm anticipating in the next couple of days is a small rally, maybe in the next couple of hours tomorrow. So small rally, struggle to cross 43,800 and then again come down, some consolidation, and finally break 43,500. So basically 43,800 is the level which I have to watch on the upside. And now, if 43,800 is a challenge for the markets to break, for the buyers to break, this will lead to testing of 43,500 levels, 43,400 to 500 levels. So, if 43,400 is a concern, then we will probably start breaking down below 43,400 also. So, basically, the buyers are not doing a very great job of defending their support areas. That is what I see with momentum divergence also seen. So, basically, 43,800 is the level which you have to watch. Any struggle to cross 43,800 to 44,000, use this as an opportunity, take confirmation on the selling side, and look at probably creating a short position around that area. This is what I would probably do. Looking at the data perspective, so data also not looking great for the buying side. There has been lot of calls being written. If you see today, about 1 CR plus calls have been written, and if you see put side or the bullish open interest, if you see, it's hardly 3 lakhs. So where is 3 lakhs versus 1 CR open interest built up on the call side? So not definitely not in favor of buying side. So where is the aggressive rating on the call side that we see? 44,000 we see about 20 lakhs open interest. 44,100 8 lakhs, 44,200 16 lakhs. So basically 3 4 strikes, we have seen more than 70 80 lakhs open interest built up on the call side, suggesting call traders are absolutely in gain, or rather they are in control. If you see puts unwinding at 44,000, unwinding at 900, unwinding at 800. So I see lot of unwinding. They have made some attempt to ride around 43,500. So basically, Today, if you see unwinding happening across all the put options, all the put strikes. So basically, any up move, definitely, definitely the call letters who have written today, they will probably start defending. So 44,000 to 43,800 is the levels that we will probably think of shorting for a target of 43,500. And if 43,500 breaks, further meltdown, 43,500 will not be broken so easily. It will take little bit of challenge for the sellers to defend or rather break that 43,500 defense from the buyers. That is what I see on Bank Nifty. If I quickly take a look at the Nifty chart, Nifty is relatively strong, which was my view on Saturday evening as well, where we met for weekly market review. As long as the price stays above the short-term moving average, I will still hold on to buy on dips on Nifty. Though the concern with divergence on RSI is definitely seen, but one day up, one day up, one day down, one day up, one day down. So basically, it is a very confusing market for any what do you call overnight position trader or positional trader. So basically, what I do is this. So definitely 18,800. There is a struggle today. Looking at the Bank Nifty weakness, Bank Nifty contributes majorly for Nifty outperformance, but Bank Nifty is withholding itself. So without Bank Nifty performance, without IT being supportive, so hardly it is little difficult for Nifty to start climbing to a new high. So I would with Nifty I would go with a slightly sideways to bullish view, whereas Bank Nifty I will go with sideways to bearish view. Okay, what are the levels to watch? As long as the price stays above the short-term moving average, I will still hold on to my bullish view. On an hourly chart, if you see the structure, every time market came to this long-term moving average and an hourly chart, there has been a bounce, and that was one of the reasons why we saw a bounce on Friday. Now on Monday, we are back to the same long-term moving average support area. So some up move can be expected tomorrow, but looking at the structure on the Bank Nifty, so Bank Nifty might drag Nifty little lower. So basically, on Nifty, slightly bullish to sideways view is better. On Bank Nifty, bearish to sideways view is better. If I look at options data, where is the writing happening on the call on the put side? Call side, we see a lot of writing around 18,800 call. As on Friday at 18,800, call rating was about 66 lakhs. Today it is more than 1 CR. That means about 35 lakhs plus have been written at 18,800, making it a resistance for this expiry. Put OI, highest put OI was at 18,700, which about 1.2 CR data. Now 1.2 CR to 98 lakhs. That means there has been unwinding at 18,700. So 18,800 will definitely become a resistance for next at least 1 or 2 days. 700, whether they will defend 700 or not, because given the unwinding at 700, there might be some challenges to 18,700 put writers. So 21 lakh unwinding at 700 is what we have seen. 750 we see about 10 lakhs unwinding. 18,800 we see 24 lakhs unwinding on the put side, but 40 odd lakhs writing on the call side. So 18,800 becomes a resistance area. 800, 850, 900. If you see three strikes on the call side, we see more than 1.2, 1.3 CR call rating, suggesting the call raters are gaining control. Overall structure, if you see 1.8 CR rating on the call side versus 50 lakhs unwinding on the put side. So option data is also again not in favor of buyers. So overall structure doesn't look great on the upside. So I would keep 18,800 as the most important strike. So as long as the market doesn't go above 18,800, we will have the market push 18,700 put writers. So 18,000, we will see if market, this rally, if market doesn't go up, we will probably see 18,700 testing. Below 18,700 is where we would expect some kind of a sell off towards 18,550, 560 level. So as long as 18,700 is intact, bullish to sideways view. If 700 breaks, we will probably expect some sell off towards 18,560, 550 levels, which was support area for the last couple of days. So this is my analysis. Nifty sideways to bullish. 700 is a level which you have to watch on the downside. Bank Nifty sideways to bearish. 43,800 to 44,000 is the resistance level where it gives us a very good shorting opportunity. For updates like this, keep following us on YouTube and other social media networks so that you don't miss any of these updates. And thank you so much for watching us. Bye bye.